Hey there! Today we're going to be talking about this form right here, the IRS W-9 form. We're going to talk about what it is, what you need to know about it, and how to fill out the different selections. We're also going to be talking about the consequences of not having your entity structured correctly. If you don't know what an entity is, no worries, we're going to cover that as well. But I can tell you this is one of the most important lessons that I learned as an entrepreneur. Unfortunately, I learned it the hard way after throwing money in the garbage can for nearly a decade, all over one simple form. Quick disclaimer, I am not a financial or legal professional. This is not financial or legal advice. I'm simply sharing with you information that I have received, and I'm not making any recommendations about your situation at all. So make sure you have a legal and tax professional that you're consulting with. That will save you a lot of money, and that will make your life a lot easier as a business owner, that's for sure. Welcome to the Event Secrets Podcast, where we talk about how to put on better events, take better care of our clients, and make a whole lot more money in the process. This is an all-action, no-fluff podcast full of actionable insights designed specifically for event professionals. All right, now let's go back to our friendly W-9 form. By law, according to the tax code, whenever a company is hiring a freelancer or a contractor or another company to provide a service that's going to be paid more than $600 in a given tax year, that company is required to issue a 1099 tax form. And in order for them to issue a 1099 tax form, they're going to ask for your W-9, which is simply asking for your information, so your name, your business name, the tax classification that you have under which you're operating, and your social security number or your employer identification number. And then you can sign here, date it and all that, and the rest of the pages are just instructions. So that, in its simplest form, is what a W-9 is. Now, believe it or not, which one of these check marks you are operating under, or which ones you're selecting, along with the entity that is set up, is going to have a massive impact on your tax bill at the end of the year. And so I want to share with you something that it took me about a decade to learn. And once again, this is not legal or financial advice at all. This is just purely informational. To do that, we need to understand a little bit about entity types. So an entity is simply the legal container under which you're doing business. So you have all these different legal containers here. The first one is a sole proprietorship. Now this is kind of the default legal container. So if I start selling cookies or if I start doing event services or consulting or whatever, and I have not formally created an entity with the government, both the federal and the state government, then I'm operating under a sole proprietorship. Once again, this is not legal or financial advice, but you do not want to do business under a sole proprietorship. There's a lot of bad things that come from doing that. You know you're doing business under a sole proprietorship, once again, if you have not paid money to the state and federal governments to create an entity type, and if you have not structured any sort of organizational documents for these entity types. You don't want this. If you're filling out a W-9 and you put your personal name and your social security number, you are being classified as a sole proprietorship. This is bad. Once again. Then we have an LLC. This is the most common business structure in America, and this is probably the one that I imagine you would or should be operating under. This is what Balloon Artisan is ran under. Now, each LLC has different ways that they can be classified as far as taxes goes. They can be classified as a single member LLC, they can be classified as a partnership, or they can be classified as an S-Corp. Now, spoiler alert, I can tell you right here, not knowing about this cost me about $6,000 to $8,000 every year for pretty much a decade. It was really painful. And so this is something that's really, really important that you understand and that you're learning about, because it doesn't take a lot of work to do this. Matter of fact, choosing to be taxed as a S corporation under an LLC is just a one-page document that you have to send to the IRS. And like I said, it can save you thousands and thousands of dollars every year. And I'm going to break down why that is. So you have your LLC, then you have your S Corp, C Corp, and partnerships. Now, these two we're not really going to talk about much. If you're raising funding or getting investors, you're probably going to want to structure under one of those, but that's kind of beyond this scope. Now, these two right here, these share a very important similarity, and we're going to talk about that in a sec, but it's when it comes to risk. Basically, these are the most risky entity types, and when you're doing business under these, you can get into a lot of trouble really fast, so you don't want to do that. All right, so once again, we got this nice little burning garbage can full of cash here. This was my bank account for years because I had an accountant that did not educate me on this properly, and he did not think to tell me that I should be reclassifying my legal entity. Luckily, when I started out, I was not a sole proprietor for long because I did some research. I'm like, oh, this is bad news. So I established an LLC, but I was operating under a single member LLC. Now, when it comes to taxes or income or revenue or whatever, this is the important distinction between these two. We're not going to talk about that partnership LLC. I'm actually not super familiar with that. Even if you have a business partner, this is still a better route to go. Generally, of course, not financial or legal advice, right? Talk to your legal professionals. But this is generally a better way to go. If you have a partner, you can't be a single member LLC because by default you have 2 members. So there's that. Now what happens here, let's say that we run a business, right, an LLC, and we're doing, DJ services or whatever event professional services we have. And at the end of the year, we take all of our income minus all of our expenses, and we're left with $100,000. Yay, so we get $100,000 for all of our hard work. This is what's important to understand. This gets taxed differently depending on which option you choose. And the reason for this is the government has, they call them FICA taxes. So it's your Social Security and your Medicare or whatever it is. And it equates to 15.3% of your income up to like a certain dollar amount. But 15.3% of your income goes towards those things. So when you're operating as sole proprietorship, you have 15.3% of your income that's getting taken out of this. So $15,300 is getting shaved out of this for your Social Security and Medicare taxes, right? Now, when you have a W-2 job, you're also paying this 15.3%, but what happens is you pay half and your employer pays half. And usually you're paying all of it. Your employer might be paying for half of it, but they're factoring that into your compensation. I can guarantee you that. So you're actually paying this whole thing, but you just don't notice you're paying the whole thing. But as an entrepreneur and as someone that's operating in the event space or in any business, you are responsible for this 15.3% tax on your salary. Now, if you're a sole proprietorship, this $100,000 becomes your salary. And so you are paying 15.3% plus your income tax. Plus income tax on this money. So you're throwing a lot of money away to the government, which, we need taxes. It builds roads and infrastructure and military and government services and all that. Very important stuff. But nonetheless, you are throwing 15.3% additional taxes away on your $100,000. When you are a single member LLC, the same thing applies. All this income gets reported as kind of the same bucket, and you are paying this 15.3% additional tax on this $100,000 income. So that's $15,300. Okay, now, when we choose to be taxed as an S Corp, there are some things that we have to do differently legally. Like you have to pay yourself what's called a reasonable salary. Okay, that's what the IRS calls it, a reasonable salary. And so if you're making $100,000, now reasonable salary can mean a lot of things and you can argue one way or the other. Like we couldn't pay ourselves a $5 salary and then take the rest of it is distributions. But let's say, for example, we decide, okay, out of this $100,000 we make, we're going to pay ourselves a $50,000 salary, and then we're going to pay ourselves $50,000 in distributions. So that's just money that the company pays us for owning the entity, right? So we did a good job, we owned something that made money, we get compensated for that. Yay! So now, this is where this S Corp thing comes into play here. Remember, it takes one IRS form, a one-page IRS form. You have to mail it into the government by a certain time to implement this. Now, it may not be worth it if you're only making, $20,000, $30,000 a year in your LLC or whatever. But if you're making over like $50,000, it probably makes sense to do this. Once again, not financial or legal advice. Talk to your professional. The key distinction here is the government, when you elect to be taxed as an S Corp, you can say, okay, only $50,000 of this is actually my salary, and then $50,000 of this is a distribution, which means this 15.3% only applies to your salary portion. It does not apply to the $50K distribution. So that means that you are saving 15.3% over here, which ends up being like $7,650, something like that. So $7,650 just for this, each year, just for this one change, and it doesn't take a lot of time. I did not know this. I was paying my CPA for years before I found this out. And then I found this out through like a podcast or something, I can't remember, research, and I about lost it on my CPA. I'm like, dude, why didn't you tell me this? I've been paying all this extra money that I didn't need to pay for all these years. And the government, like this isn't a loophole or anything. This is how the government structures the tax code for certain reasons, right? So I was very upset about this. And I ended up switching CPAs as a result of it. One reason I really love talking about stuff like this is because it's awesome to create a business or to be a freelancer or to have marketable skills that people will pay you for. It's truly such a rewarding, fulfilling thing. What is not awesome is working really hard, bringing in money, bringing in sales, taking all this risk, putting everything on the line, and not having any money to show for it at the end of the day. For most of my entrepreneurial career, I could have made more money just working a W-2 job. Kind of rough, right? Now as an entrepreneur, I make a lot more money than I could have made in a W-2 job, but for the early years, that wasn't the case. And so I'm a huge fan in finding these low-hanging fruits when it comes to putting more money in your pocket, because that means that you're gonna have more results to show for the efforts that you're exerting. All right, so these are the entity types. The next thing I wanna talk about, in addition to tax differentiation and tax savings, is this concept of risk, okay? Once again, these are the main entity structures that I see. These two right here, I mentioned it before, these are bad news, and here's why. When you operate as a sole proprietor or as a partnership, the government doesn't really see a difference between you as a person, so in this case, versus Keenan Price, and Keenan Price's business. We're one and the same. That's the legal definition of this. So as a sole proprietor, let's say that I'm doing some event thing and a ladder falls on somebody and they get really hurt and they go to the hospital and it's a $100,000 medical bill. This is a big problem. So what happens as a sole proprietor is not only can that person sue your business operations, which don't exist. You don't actually have a business as this, right? You are you, that's it. But they can sue you personally. They can get your bank accounts, they can take your car, they can get your money, they can take your dog, they can, whatever they want to go after, they can sue you for that. With a partnership, it's doubly bad because not only can they sue you, but they can also sue your partner. With a partnership, it's really bad because not only can they sue you for your mistakes like they can as a sole proprietor, but they can also sue you for your partner's mistakes and vice versa. So imagine your partner hurts someone, drops a ladder on somebody, hurts them, sends them to the hospital. The partner doesn't have enough money to cover the lawsuit, so guess who they're coming for? They're coming for you. Okay, that's a very big risk and you might not be able to recover from that for a long, long time, if ever. You do not want to be operating under these two entity types, which, yeah, kind of not entity types in a way. So LLCs and corporations are definitely the better way to go, and that's because the government views that there's a degree of separation from your identity as a person and your business's identity. So Balloon Artisan, for example, is not the same thing as Keenan Price. 13 years ago, it was the same thing. Balloon Artisan was Keenan Price because I was a sole proprietor, right? For a little bit, and then I switched over to an LLC. So, if someone on my team drops a ladder and it hurts somebody, same scenario, the only thing that they can go after are the assets inside of the entity, right? Now, another good thing is we have insurance on our entity just to protect us even further. So if somebody came and they sued us, we have insurance that will protect us and care for the person that got hurt, right? We don't want to just run away and leave someone high and dry. Like if our team hurts somebody, we need to be accountable for that and we need to help take care of them in whatever way that looks like. But this is a very important distinction because now I have the peace of mind as an employer to know that if someone on my team hurts somebody, I'm not going to lose my house and my car and my savings accounts and retirement funds and all that stuff. I could lose all the assets in the business, but my personal assets are protected as long as I am operating within the legal bounds of these entity types, which I am. So when you receive this form right here, the IRS W-9, you really need to make sure you are not selecting this box right here. Not a lot of people set up partnerships. Most attorneys and things will not let you do a partnership. But a sole proprietor, that is the default. So if you do not have an entity and you do not have an LLC, and it's very obvious if you have one because it's kind of a pain in the ass, it costs a little bit of money to get one, not much though, a couple $100 maybe, then you have a sole proprietorship and you are taking on a ton of risk if anything goes wrong. And hopefully it doesn't go wrong. Hopefully it doesn't go wrong if you have an entity as well, but you're taking on a bunch of risk for you and your family and your loved ones, and it can take you a long time to recover from that. So going back to these entity types, if you're choosing the wrong entity, but once again, not legal or financial advice, you are throwing money in the garbage can, pouring lighter fluid on it, and lighting it on fire, and you are wasting money. And the hard thing about it is it doesn't even take long to classify things correctly. One afternoon and it's done, and those savings will last you forever. The last thing I want to talk about is the importance of working with professionals when it comes to your business, your livelihood, your risk that you're taking on, and even in the event space. I mean, there's always someone that will do it for less. Make sure you're working with someone who's truly professional that will give you the service that you need. Don't try to cut corners when it comes to this stuff because the cost can be very large. This one thing right here easily cost me $50,000, okay? Very expensive. There's no accountant that I know of that would charge me $50,000 to help me set up my business entity. So I paid a lot of money in dumb tax from not knowing what to do and from partnering with the wrong people because I was trying to cut some corners and save some money in the early days, right? So it's super important whenever you're doing anything legal or financial related, you need to work with professionals. Don't try to cut corners. Don't try to save money when it comes to legal or professional advice. Find the best people and the best team, pay them well to make sure they're looking after you. There's an old saying that goes, an ounce of prevention is better than a pound of cure, or something like that, right? And that is so true in finance and legal. You might be able to find someone that will do your books or file your taxes for $200 a year or whatever, but that person might have a higher cost in the end because they're giving you bad advice, which is what I did. I found a guy, he's like, yeah, I'll do it for $250. I'm like, that's way better than the $1,000 I was quoted. I'll go with this guy. Should have been a red flag for me. This guy didn't really know what he was doing, because the people that are really good professionals don't need to discount their services because people know they're good and they have a lot of clients, right? Kind of ironic. Same thing happens to us as event professionals. The people that are always at the bottom of the price ladder are usually the inexperienced ones that have no clue what they're doing. And when clients go with those people to save money, sometimes it works out, sometimes it doesn't. But one thing's for certain, they're choosing to go with somebody who's less experienced, and that can definitely backfire and end up having a greater overall cost than if they just paid for the professional from the get-go, right? Thank you for tuning in to the Event Secrets podcast, where we talk about how to put on better events, take better care of our clients, and make a whole lot more money in the process. If you're on LinkedIn, real quick before we go, send me a connection request. My name's Keenan Price. I'm the CEO of Balloon Artisan and the host of the Event Secrets podcast. I love connecting with other event professionals. Tell me you watched the show. Plus, I love connecting with other event professionals. I feel like it can be a pretty lonely industry at times. So the more friends we have, the easier it is and the better we can all make our lives and grow the industry as a whole.